Hello, good day, students. Today we will be discussing chapter 14, all about financial statements. So here are the learning objectives for this chapter. First, state the general principle in the presentation of our financial statement. Second, prepare a complete set of a general purpose financial statement of a government entity, including partial notes to your financial statements. Third, describe the accounting and disclosure requirements for events after the reporting date, such as changes in accounting policy, changes in accounting estimates, and correction of errors. And the fourth objective is to state the other reports prepared by the government entities. Okay, so when we say a financial statement or a general purpose financial statement, these are those intended to meet the needs of users who are not in a position to demand reports tailored to meet their particular information needs. So that's a general purpose financial statement. The main objective or the objective of a general purpose financial statement is to provide information about the entity's financial position, the financial performance, and cash flow that is useful to a wide range of users in making economic decisions and demonstrate the accountability of the entity for the resources entrusted to it. And who is responsible for financial statement? So basically, it is the management who is the responsibility or who has the responsibility over the financial statement, particularly the head of the entity, jointly with the head of the finance or the head of the accounting. So in general, the responsibility of the financial statement being prepared rests with the entity's management. What are the complete set or the component of a general purpose financial statement? So you have 6. First, you have the statement of financial position, or formerly known as the balance sheet. Second is the statement of financial performance, or what we commonly know as the income statement. Third, you have the statement of changes in net asset or equity. Fourth, you have the statement of cash flow. The fifth is a statement of comparison of budget and actual amounts. So this is a comparative financial statement. Normally, it's the previous year financial statement. And then 6, you have the notes to the financial statement, comprising a summary of significant accounting policies and other explanatory notes. As to the general principle in the presentation of the financial statement, you have this different principle. First, you have fair presentation. It means financial statements are prepared fairly without somewhat like siding with a particular entity. So that's fair presentation. Second, you have, of course, compliance of a particular standards. In their case, the public practice standards in accounting. Okay. And you have the departure from PPSAs and going concern. So going concern, it means the assumption is that the company will continue its operation, or an entity will continue its operation for a foreseeable future time. You have consistency of presentation. It means same accounting policy or principle is adapted from one accounting period to the other. Materiality and aggregation. So it means you consider the value that is significant. Offsetting. So items that are offset, okay, is somewhat like included. or is not allowed, no? Depending on the materiality of an item. And then you have a comparative information. So again, it is part of the component of the financial statement. You will have a comparative statement based on the current prior period. Now let's talk about the identification of your financial statement. So the display, or how are you going to present the financial statement. Of course, you should have, or it should bear the name of the reporting entity, and then whether the financial statement cover an individual or a group of entity, the reporting date or the period covered by the financial statement, whichever is appropriate to the component of the financial statement, and the name of fund cluster, the reporting currency, and of course, the level of rounding of the amounts. So these are the identification of your financial statement. It should be written, no? The face of the financial statement. The reporting period as to its presentation, it shall be at least annually. Now let's talk about the first component, which is the statement of the financial position. So basically, it is presented in comparative, condensed, and the detailed format. When you present a condensed financial statement, we will have an example later on. Of course, you will present only line items like asset, current, non-current, so one line item only. Okay, and then of course, as to the detail, you should have a schedule in the notes to your financial statement. The second one is a detailed statement of financial position wherein you will present all the asset, liability, and equity accounts in the revised chart of accounts. So if it is a detailed statement of financial position, of course, we can assume that you will have a lot of pages, no? Because you will prepare in detail all your asset, the liability, and equity accounts based on the revised chart of accounts. And as to identifying an item, whether it's current or non-current, so it is here. An item or an asset is considered as current if it is expected to be realized or is held for sale or incomes or consumption and the entity's normal operating cycle, and it is held primarily for trading. It is expected to be realized within 12 months after the reporting date, and it is cash or a cash equivalent unless it is restricted from being exchanged or used to settle a liability for at least 12 months after the reporting date. On the other side, a current liability is expected to be settled in the entity's normal operating cycle, and it is held primarily for trading. It is due to be settled within 12 months after the reporting date, and the entity does not have an conditional right to defer settlement of the liability for at least 12 months after the reporting date. Or in general, as you can see, you will consider an item as either current asset or liability if it is consumed or used within 12 months, or if it is a liability paid within 12 months. You consider that as current. So here is an example of a statement of financial position. So you have it here. You just put in the name of the entity and a statement of financial position and the name of the fund or all funds or name of funds and the date. So this is 2015. You will have it here, the amounts presented as your current assets and the non-current assets. Okay, so yeah, as you can see, the current year is 2015. Then you have a comparison, the year which is 2014. And by the way, as to the notes, notes will be presented in your notes to financial statement. So this will serve as schedule or the breakdown of, for example, cash and cash equivalents. That's note number 6. Breakdown for investment. That's note number 7. Breakdown for the receivable. That's note number 8. So what you will see in here is only the total. As to the detail, as to the component of the items, it will be presented as a schedule in the notes to your financial statement. You call it as a schedule. So same thing as sa commercial accounting. Okay? And then for your current as well as the non-current liabilities, and this is the notes, and the accumulated surplus or deficit. You will present it here. How much is your accumulated surplus or deficit? Then what you will get is total net assets or equity. So unlike in commercial accounting, we call it as total liabilities and equity. But in the government accounting, we call it as total net assets or equity. Okay, now let's proceed to the second component of the financial statement, statement of financial performance. So generally, revenue and expenses are recognized in surplus or deficit, except for the following, which are recognized directly in equity, like the correction of prior period errors, the effect of changes in accounting policy, and any gains or losses on remeasuring available for sale financial assets. Again, revenue and expenses in general are recognized in the statement of financial performance. And then these three are reported directly in the equity. Okay, it is not presented in the statement of financial performance. As to presentation of expense, you can present it either based on functional expense method or nature of expense method, whichever is more relevant. If expenses are classified by function, additional disclosure shall be made on the nature of the expenses, including any depreciation, amortization, and employee benefit expenses. So again, if it is presented or classified according to function, you will have additional disclosures as to the nature of the expense, including depreciation, amortization, and employee benefits. It shall be disclosed in your notes to your financial statement. So we have it here, an example of the statement of financial performance. This is the format. Okay, you have it here, the name of the entity, the statement of financial performance, and then all funds or the name of fund. And for the year ended December 31, 2015. So this is the current year, this is the comparative year. So what you will present here are the total. As to the details of the component of the total, it shall be presented as a schedule in the notes to your financial statement. So these are the notes. And then what you will have at the end of a particular year is either a surplus or a deficit. Okay, now let's take a look at the statement of changes in net asset or equity for the period. So the statement of changes in net asset or equity shows the increase or decrease in the entity's net asset or its equity during the period resulting from the following. Letter A, you have surplus or deficit for the period. Letter B, items of revenue and expense that are recognized directly in equity. And then you have letter C, the effect of changes in accounting policy and correction of errors. Letter D, the balance of the accumulated surplus or deficit at the beginning of the period and the reporting date and the changes during the period. As you can see it here, Unlike in the commercial accounting, items such as change in accounting policy as well as correction of errors, you will present it as part of your statement of comprehensive income. But in the government accounting side, okay, again, as mentioned earlier, the changes in the accounting policy, errors or correction of errors will be part or will be presented as part in the statement of changes in net asset or equity. So we have it here, a sample, a pro forma statement of changes in net asset or equity. So you have the beginning balance and add or deduct any changes in accounting policy, prior period errors, or other adjustments in general. So you have the restated balance, and then add or deduct the following: surplus or the deficit for the period, and the adjustment of net revenue recognized directly in the net asset or equity. Then what you will get is the balance at the end of the period, which shall be the same amount as presented in your statement of financial position. Okay, the balance of your net asset or the equity. Okay, now let's proceed to the fourth component, the statement of cash flow. So the cash flow shows the sources and utilization of cash and cash equivalent during the period according to the following activities. So operating activities, for example, presented using the direct method, investing activities, and financing activities. So same format as in the commercial accounting, the statement of cash flow, the in and out of cash will be grouped according to operating activity, investing, and financing. So here are a specific example of operating activities in the government accounting. Of course, you have the receipt of the notice of cash allocation and the reversion of unused notice of cash allocation, the receipt or provision of assistance and subsidy to other entities, collection of income and receivable, payment of expenses, cash advances and payables, and enter or intra-entity transfer funds. So those are some of the examples for operating activities. For investing activities, you have the acquisition and disposal of your property, plant, and equipment, investment property, intangible asset, and other non-current asset. That's part of the investing activity. Acquisition and disposal of investment and securities and derivatives, and collection and provision of long-term loans. And the example of financing activities, you have the issuance of notes, loans and bonds payable and their repayments. That's part of financing activities. And the finance lease payments pertaining to the reduction of the outstanding finance lease liability. So these are some of the examples of financing activities. As to the effect of the foreign exchange rate, so basically, if the cash flow denominated in a foreign currency are translated using the spot exchange rate at the date of the cash flow, that will be your basis, no? If it is a foreign denominated cash flow, you use foreign currency, you use the spot rate or the spot exchange rate at the date of the cash flow, meaning depending on what date, how much is the exchange rate on that date of the during the exchange, that will be the basis in our recording. Exchange differences are not cash flow, but a reconciliation of the cash and cash equivalent at the beginning and the end of the period. And exchange differences are reported in the statement of cash flow separately from the operation, investing, and financing activity. You will see this one in the example, no, of a statement of cash flow, wherein if there is a foreign currency exchanges, Okay, it will be presented, the exchange difference will be presented as one line item in your statement of cash flow. And you have it here, a statement of comparison of budget and the actual amounts. This is the fifth component. So the statement of comparison of budget and actual amount shows the differences or the variances between the budgeted amounts and the actual results for a given reporting period. So you will see the variances against budgeted and the actual. Now we have here a few definitions related to financial statement for government accounting. So you have it here. When you say original budget, this is the initially approved budget for the period. Final budget, this is the original budget adjusted for all reserves. Carryover amounts, realignment, transfer, allocations, and other authorized legislative or similar authority changes applicable to the period. So since in the government, you base your allocation of funds on the budget, so that is why you have it here. Either it's original or final. And you have actual amounts on a comparable basis. This represents the actual disbursement made during the period. So the actual amounts on a comparable basis to the budgeted amounts are on a cash basis. And they may not always be equal to the amount presented in the other financial statement, which are on accrual basis. And you have it here, the differences between the actual amounts on a comparable basis and amounts presented in other components of the financial statement are classified as follows. The basis for differences, it occurs when the approved budget is prepared on a basis other than the accounting basis. Timing differences occur when the budget period differs from the reporting period reflected in the financial statement. And entity differences occur when the budget omits program or entities that are part of the entity for which the financial statements are prepared. Okay, so you have it here. This is another statement that the government agency will prepare, the statement of comparison of budget as well as the actual amounts. So you have it here, the variances, the difference. So first you have the receipts and then the payments. Okay, again, this is part of the financial statement of our government agency. Since the budget is prepared in the previous year, it will be used on the current year. There might be changes as to the amounts. So that is why you should prepare this one, the statement of comparison of budget and the actual amounts. And then, of course, the last component, you have the notes to the financial statement. So the notes shall be structured in a systematic and logical manner to show the following. First, the general information of the reporting entity, the nature of the reporting entity, etc. It will be stated in the notes. The statement of compliance with the related public practice standards, accounting standards, and the basis of preparation of the financial statement, and the summary of significant accounting policies, if there is, disaggregation or the breakdown, and other supporting information for the line items in the other financial statements. And other disclosures required by the government accounting, you have explanation for the differences between the budgeted and the actual. Events after the reporting date, if it is material, it shall be stated in the notes to your financial statement. Changes in accounting policy and accounting estimate and prior period errors, if there is, it should be presented in the notes. Contingent liabilities, contingent assets, and unrecognized contractual commitments, related party disclosures, and you have non-financial disclosures like the entity's financial risk management objectives and policy. These are the non-financial disclosures. And other disclosures not required by the government accounting standards, but the management deems relevant to the understanding of the financial statement. Again, for the government accounting, we do have PPSAs. Now, as to events after the reporting date, so the one that needs to be disclosed, you could have it as either adjusting events or non-adjusting events. Like when you say adjusting events, those that provide evidence of conditions that existed at the reporting date, and the non-adjusting events, those that are indicative of conditions that arose after the reporting date. So when you say adjusting events, it means mga corrections siya, like the errors, it should be reflected in the net surplus, no? Or deficit. Non-adjusting events, you will recognize this prospectively since it is after reporting date. So you have it here, sample of adjusting events, a settlement of a court case, bankruptcy of a debtor that evidences an impairment of a receivable, sale of inventories that evidences the correct net realizable value of inventories at the reporting date, and the determination of the amount of revenue pursuant to a revenue sharing agreement with another entity. And of course, as I mentioned, changes in accounting policy. So it is accounted for using a transitional provision, or in the absence of a transitional provision, retrospective application. And in the event that the retrospective application is impracticable, then you will apply prospective application. So sa mga incoming na financial statement. Again, a change in accounting estimate is accounted for prospective application. Errors, material error are corrected by retrospective restatement. It means you have to correct your net surplus or deficit since retrospective at the time when the error was committed. Now, as to interim financial statements, these are financial statements prepared less than a year. So basically, government entities prepare interim financial statement on a quarterly basis using the same accounting policy used in the annual reports. The reports prepared, you have, in addition to the financial statement, government entities are also required to prepare and submit the following. You have the trial balance, and then the regional breakdown of income and the expenses. Now let's take a look at problem 14-4 for classroom discussion. Let me prepare first the document. Okay, so here it is, 14-4 for classroom discussion. So the first question would be, this refers to financial statement intended to meet the needs of users who are not in a position to demand reports tailored to meet their particular information needs. Of course, our answer to this one is a general purpose financial statement. Second question, which of the following is an objective of a general purpose financial statement? Okay, let me open again the next page. So the question that is being asked is the objective of a general purpose financial statement. Our answer to this one is letter D, A and B. It means, okay, a general purpose financial statement objective is to provide information about the entity's financial position, financial performance, and cash flow that is useful to a wide range of users in making economic decisions. And also, Of course, it is to demonstrate the accountability of the entity for the resources entrusted to it. So our answer is A and B. Those are the objective of a general purpose financial statement. Number 3, according to GAM for NGS, the responsibility over the financial statement rests with the entity's management. Particularly, our answer is head of the entity, or at the same time, head of finance and accounting. So that's letter D, A and B. For number 4, which of the following is a peculiar general purpose financial statement of the government entity? The government entity. So our answer for this one is, or pertaining lang, or somewhat like unique to a general purpose financial statement of a government entity. Our answer is letter C, a statement of comparison of budget and the actual amounts. So this is not part in the commercial accounting. This is only peculiar to or specific to the government entity. Again, the statement of comparison of budget and the actual amounts. Number 5, amounts in the statement of financial position shows. So for number 5, our answer is letter B, cumulative balances from the formation of the entity up to the reporting date. Okay. Next, according to the government accounting manual for the national government account for NGA's national government accounting, the statement of financial position is presented in the comparative form, and in the answer is, of course, all of this: condensed format, detailed format, or a classified format. Number 7, the effect of which the following is recognized directly in equity rather than in surplus or deficit. So the items that is recognized directly in equity rather than in surplus or deficit. So the answer actually is on the next page, page 3. Okay, it's gains or losses on measuring. No, our answer should be all of these. Wait, let me go back to the previous question. Correction of correction of current period errors. It should be prior period errors. Okay. Effect of changes in accounting estimate. This is prospective man. So again, let me correct. Our answer should be let me open that again. Okay, our answer should be gains or losses on remeasuring available for sale financial assets. Sorry for that. Okay. Then for number 8, finance lease payment pertaining to the reduction of the outstanding finance lease liability are classified in the statement of cash flow as financing activity. It's part of financing activity. Now for number 9, this is related to foreign currency. Like entity A present its cash flow from operating activities using the direct method, and then entity A holds foreign currencies. These are appropriately translated to the spot exchange rates at the reporting date. How should entity A present the translation differences in the statement of cash flow? So basically, our answer is letter B, as a reconciliation of cash and cash equivalent at the beginning and the end of the period, presented separately from operating, investing, and financing activities. And the last question would be, which of the following is not among the other reports required to be submitted by government entities to COA? Okay, this one. Worksheet is not required to be submitted. So a completed 14-column worksheet. This is not required to be submitted. Okay, I guess that would be all. Thank you for listening to the discussion attentively, and I'll see you around.